All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got your crypto news for you, and let's talk about the Chinese Ponzi scheme that likely crashed the price of Bitcoin from some $11,800 to under $10,000 in just a couple days. That's been going around, and it hasn't really been going around that much. I've only seen this on a couple news articles, and most of the viewers on my channel actually told me about this, so nobody's talking about this, which was very interesting to see. And yesterday I made a video talking about how the Dow dropped by 800 points in one day, which is a pretty hefty drop for the Dow, and how Bitcoin basically did at the same time, and the correlation was pretty coincidental. And I thought that since we're getting closer to that alleged recession in the stock market, perhaps the price of Bitcoin will either be a hedge or maybe it will go down with it. But what I now believe has caused the price of Bitcoin to go down so rapidly is this Ponzi scheme right here that nobody seems to know about. Allegedly collapsed the China-based Ponzi scheme. Plus token may be liquidating on exchanges portions of a reported $3.5 billion cache of stolen cryptocurrency. So this is borderline BitConnect here. According to venture capitalist Dovey Wan, who's always on Twitter, is now appealing to the crypto ecosystem to spread awareness of the critical matter before it's too late. Now, this is happening in China, and China's kind of an interesting place in that the news doesn't get out so much sometimes. A lot of things go on in China that sort of go under the radar. CoinDesk contributor known for her inside knowledge of the Chinese market reported the claim Thursday in a tweet. If accurate, Wan's revelation would shed light on the recent sell pressure that has seen Bitcoin lose thousands of dollars in days and descend below the bull's psychological bedrock of $10,000. So she says, if everybody can help retweet this, and the on-chain analysis expert please do. This critical incident has been overlooked by the Western community and will need all hands on deck to chase the scams, fund, and freeze it before it's too late. Talking to Bryant and several other people, as per somebody's request, this thread is the ongoing sell-offs made by Plus Token, the biggest Chinese Ponzi, which scammed 70,000 Bitcoin, not $70,000 in Bitcoin, 70,000 Bitcoin, and plus or minus 800,000 Ethereum. I mentioned it briefly in my last CoinDesk op-ed, but worth additional attention as it may cause further sells with some various pictures. According to One, Plus Token still has control over the vast sum of crypto and has been dispersing parts of it to exchanges including Huobi, Bittrex, and Binance, in attempting to launder the remainder of the coins by splitting the sum between a number of wallets not knowingly associated with the company. She believes the sell-off began in early July, which kind of makes sense because we were up to 14,000, well, close to 14,000, and didn't quite make it. But it looks like the sell-off has, if there is a sell-off, that it's definitely increasing. So Plus Token debuted in June 2018 with a profit-sharing cryptocurrency wallet, reportedly entitling users to monthly interest of 6 to 18% on all deposited cryptocurrency, citing many of the unproven claims and extravagant marketing tactics associated with the now defunct BitConnect, including bot-based trading and arbitrage. Gotta love that bot-based trading and arbitrage. Always real, never fake. On June 27, 2019, a number of Plus Token wallet users centered in China, South Korea, and Japan, according to various reports, began to state being unable to withdraw their assets from the mobile-based crypto wallet. The news did little to develop further than widespread allegations the Plus Token team had run off with as much as $3 billion worth of user funds, and did not trigger the media frenzy expected of such an outlandish event, which, true, where is the media attention on this? So, yet just days after the first reports of faltering withdrawals emerged, June 29th, a perhaps deliberately opaque piece of South China Morning Post revealed that 6 Chinese nationals were arrested in Vanuatu by Chinese law enforcement for operating an unnamed internet scam from the Pacific Island. and the article didn't disclose further details. Later, Alibaba-backed Chinese tech news site 36KR would reveal that the 6 apprehended in Vanuatu were none other than the founding members of the Plus token team, and that a person close to the police put the total amount of crypto misappropriated through the scheme at 20 billion Chinese yuan, approximately $2.85 billion. Wan's estimates, however, may indicate a significantly larger figure, having reported up to 200,000 BTC and 800,000 Ethereum has been tracked back to Plus wallet addresses. Wan would put the total amount of funds scanned by Plus token close to $3.5 billion. So, though little reported, the scandal has an immense scope. It could come to be realized as the largest exit scam in the history of cryptocurrency. Crypto exchanges may be unaware of the apparent scam, according to Wan, who said Chinese authorities had not publicized the information due to red tape. It's not known outside of China. Number 2, Chinese exchanges didn't do anything as it's closed by the police. And number 3, Chinese police didn't work with exchanges as crypto exchanges are not legal in China. If indeed exchanges are not aware of such a colossally illicit operation, the saga could unfold into another Mt. Gox-style blow to sentiment in the crypto ecosystem as the remaining members of the Plus token team cash out their holdings in what would be invariably be the biggest liquidation of stolen funds to date. So if this is true, that is a lot of money, and the crash that the entire crypto scene could see from this is phenomenal. Very BitConnect-esque, $20,000 to $3,000 kind of squash, as BitConnect likely liquidated a lot of their Bitcoin after they realized, we're going to shut down soon. Even though they knew that they're going to shut down at some point, it's just like, let's choose now. This is probably a pretty good time. So, could be the reason why we have seen some pretty tremendous drops as soon as Bitcoin gets to 13,000 or so, because there was a lot of very bullish sentiment and there wasn't much reason for it to drop. And we always like to blame the whales, but in this case, could be a gigantic Ponzi scheme. Always those Ponzi schemes. Bullish for Bitcoin, China bank bailout spark biggest credit bubble in history. So, talking statistics from various sources, the Twitter cryptocurrency trader commenter known as Crypto Arbitrage noted the last week's bailout of Hang Feng Bank was the third involving assets over $200 billion. Trillions tied up in state-owned banks that are loaned to state-owned enterprises. Biggest money printing in history, biggest credit bubble in history, they summarized. So Hang Feng, also known as Ever-Growing Bank, has agreed to a Chinese state restructuring as pressure piles on the domestic banking sector. So big trouble in China. In late May, a similar process began with the Baosheng Bank. First such move since the 1990s, followed last month by Bank of Jinzhou. Both institutions have total assets of over 500 billion yuan. Baosheng 560 billion, Jinzhou 723 billion. In total, all three banks to figure states at about 2.7 trillion yuan, or $386.3 billion. The sheer size of capital at stake appeared surprisingly underreported in the mainstream media, with cryptocurrency sources notably more vocal given Bitcoin's recent boom occurring on the back of the U.S. trade war with China. China's credit bubble banking assets as a percentage of GDP is now the highest out of any nation at any point in history, according to data from Global Macro Asset Management from Crescent Capital at almost 300%. The statistics dwarf Europe's sovereign debt crisis of 2011 and the U.S. housing market bubble of 2007. Crypto Arbitrage spelled out the boom, the bottom line for cryptocurrency fans if China's predicament spills out. Bursts equals bullish for Bitcoin, the commenter said. So we're getting close to a recession in at least the U.S. stock market, which is effectively going to hurt the entire world. And China has a bailout problem, a housing crisis, the third major bank bailout of 2019. So the question stands, we're getting close to some kind of crash, some kind of recession in the stock market, in the housing bubble across the whole world. Are people going to use Bitcoin as a hedge against all of this, or is it just going to go under? And quite frankly, nobody's going to have any money, because when all of your assets depreciate, in the same way that if Bitcoin goes down in price and goes from 20,000 to 3,000, you don't really have a lot of money to buy into Bitcoin at that point. So I can understand why a lot of people say, oh, why aren't you buying the dip? Because I already spent all my money on Bitcoin when it was a slightly higher price. I guess I missed that dip. So that makes a lot of sense. So, if the stock market crashes, nobody's going to have any money to put it into Bitcoin in the first place. So they're going to have to sell now and put it into Bitcoin. So hedge or not, we'll have to see. So moving on here, just some tweets. Coinbase Custody is now the #1 crypto custodian for institutions, says Brian Armstrong in a tweet. Also, he retweeted, tweeted, whether institutions were going to adopt crypto or not was an open question about 12 months ago. I think it's safe to say that we now know the answer. We're seeing 200 to 400 million a week in new crypto deposits come in from institutional customers. So the whales are definitely pouring a lot of money into Coinbase and the whole institutionalization, the crypto custodian with Coinbase. So, it's alive and well, regardless of these little dips in Bitcoin that everybody should be totally used to by now. But with this massive Ponzi scheme, if that is true, they have some of the most unbelievable amount of cryptocurrency. I think maybe more than BitConnect had. And if even if it is equal or slightly less than BitConnect, them liquidating all of it at once or over the course of a few months is going to put havoc on the cryptocurrency ecosystem for sure. Now that's going to make some cheaper coin for everybody to pick up, and eventually everybody will just end up buying it all up, and it'll go up in price eventually, but it could damage the ecosystem for quite some time. Some 800,000 Ethereum and 70 to some are said in the article as well, like 300,000 Bitcoin or 200,000 Bitcoin there is a tremendous amount of money. As you can see, the market cap itself is only 263 billion, and if that's $3-4 billion, hitting on exchanges like that, is there's usually not a lot of liquidity in the crypto market, and that's why it's sort of hard for institutional investors to pour millions or billions of dollars into it. But $263 billion market cap currently. We did dip down to like $9,700 Bitcoin pretty fast there. And Ethereum held out fairly well. XRP did not do so good, went down to about 25 cents. But everything seems to be trying to shoot back upwards. We can even see that Tether is at $1.01. And when you see that, that means a lot of people are, buying in, and they need their Tether, and to buy more and to sell more. And so that demand means that more people are using the exchanges currently. So we should see some prices going up slightly. But again, it depends. Is this Ponzi scheme for real or not? We'll have to wait on more news out of that, as I've only seen a couple articles actually about that Ponzi scheme. And if it's really this big, why isn't it all over the Reddits? Why isn't it all over basically every single site? We'll have to see. But I hope you guys enjoyed this. Make sure you subscribe to the channel, like the video, share the video. Helps me out a lot. My social media in the description below. But as usual, I will see you guys next time.